What's up, party people? Got some good news for a change. Even a broken Jew is right twice a day. Oh God, I probably just got demonetized for that. Good thing I don't have any monetization on YouTube, so it really doesn't matter. Though it says if I get to 1,000 followers, I'm eligible for 1,000 subscribers, I'm eligible for monetization. I have 980. I have no idea how I have 980 subscribers when I get I guess I get a few hundred views each video, so I guess it's possible. Anyway, how's everybody doing? Who would have thought that my shitco would work, at least for a day, right? Certainly not me, even though I did present over and over and over again how I thought it was a very asymmetric setup into the HD data, and that you didn't need a lot to go right for it to go up a lot. So what did we hear and what did we get? And what's the good, the bad, and the with this data? There are things, I'll start with the first of all, they were supposed to tell us some element of what the FDA said in their first meeting today, and they punted that, which isn't entirely surprising. I mean, if there's even a remote chance for accelerated approval, they're not going to talk about that now without getting it finalized with the FDA, because they're just going to piss off the FDA by talking about that. So that's not that surprising to me. What I was concerned about is in the May press release presenting that they were going to be releasing this data, they said they were going to give us up to 36 months with some patients. And instead, they gave us this 24-month historically matched natural history data that no one was expecting. And they completely left out what the smaller N 30 and 36-month data is, when in the past they've always given us that. So I was concerned about that until somebody actually asked the question on the conference call. And they said that that data is consistent with what they presented today. It's a much smaller N, but they said there's nothing in that data that is concerning versus what we got today. I was worried that they are selectively presenting us data to bolster their confidence without giving us the full picture, especially when in the past they've always given us the small N all the way out to as long as they have the follow-up. The second thing to be a little bit concerned about, though again, they had their answer, is how come we're not going to get data in December? Why are they going to wait all the way until next summer to give us an update on the data? They said that's because the natural history cohort that they're matched to gets annual follow-ups, and it's more likely to be able to match it better on an annual basis. So 3 full year data versus 2.5 year data. And I mean, that jives, right? They can't match it with 2.5 year data if those 2 natural history cohorts are annualized only when people get follow-ups. It's just the truth. So, you know, what's so interesting about this data release is that, you know, there's $8 in net cash in the stock, okay? And I haven't done it. I don't think I've done a YouTube since they sold their manufacturing last week. Maybe I did. I don't know if I did. Oh, I think I did. I don't fucking know. The company is priced for failure, right? It's priced to burn all their cash and kind of like a melting ice cube away. What you're getting at $6 is a $300 million market cap with about $400 million in net cash, with this HD drug that definitely has some chance of A, working, and B, getting accelerated approval or some form of accelerated approval. Whether the word accelerated approval means based on a surrogate. It's not unheard of or impossible to think, based on what this FDA has been doing, especially with Sarepta. This is the same group in gene therapy, that if they can show with the 3-year data, not this data set, but with the 3-year data, that the high dose is still stable enough versus I guess at that point, the natural history probably declines by 1.5 points. If the high dose only declines by 0.5 or 0.4, you have a decent size enough N on both sides to show that this drug is working. It's a $1 billion drug if it works. The current enterprise value is negative $100 million. So you have to have the context of what you're paying for versus how risky it is and how unlikely it is to get approval. Don't get me wrong. The base case is still that this will never be approved at any time in the future. Okay. But base case is 50% or 55% or 60%. Anyway, I lost my track of thought. What you're getting here is 3 other drugs that are entering the clinic this quarter that they've put hundreds of millions of dollars into, especially the epilepsy drug. And you're getting the cash. And the cash should last through 2028. There'll be no secondary here tomorrow, right? That's the beauty of investing in something that's this cash rich. You're not going to wake up to a secondary at $6. You probably wouldn't even wake up to a secondary if the stock was above $10, given that they have a cash pathway through 2028. I thought the data set's pretty interesting. I am the first thing I did when I woke up this morning was try to poke holes in it, because you can't listen to anything that a management team tells you in biotech. And I do believe that the natural history side was not data mined. I think it was selected prior to them knowing it would be stat sig, right? I mean, that's the risk here. That's what everybody is. If you want to put your cynical hat on, they went through 10 different iterations of natural history data to find a group that showed the -1 to get to stat sig versus the high dose. They said on the phone, and I believe it from the way they presented the natural history data, that they first mined the natural history data to get the best baseline that matches the people in the trial. And they then hit enter to see whether or not it was stat sig. And they did it one time, right? They didn't do this with 5 different sets of natural history data they mined to make it work. I mean, these are going to be the discussions with the FDA. The FDA will come up with their own natural history data, and they will come up with their own diagnosis of whether or not this drug is active. But the drug seems like it works, right? There is a dose effect on the efficacy side. You wouldn't expect to see that dose effect if it didn't work. And it's clearly biologically active. You know that from the NFL data. So, did I just say NFL data? Oh my God, I'm so tired. I've been up since a little bit earlier than 4 a.m. So, but anyway, I lost my train of thought. Hold on one second. It is NFL data. Okay. But what does that mean for the stock, right? Okay, so make no doubt about it. The next catalyst is them getting any sign from the FDA that they're open to an accelerated pathway here, even if the FDA says it will require 3-year data or even 4-year data. If QURE comes back by the end of the year and says the FDA is open to this, the stock works. Because again, it's not trading with any enterprise value. And at that point, they'll have to decide whether or not they want to continue with this kind of gamble and keep taking it for more data points. The stock's a $100 stock if it gets approved. Or if they try to just sell the company and let somebody else try to take it to the finish line. We're still waiting for the next step in their cost cutting, whatever that might be. And that should come in the next few weeks, I'm guessing. But look, you have to be encouraged by the data versus what people expected, which is they expected nothing because the data has been so murky over the previous 3 data releases. So that's where I am with QURE. I'm obviously trimming a little bit here. I mean, you have to understand everything is about position sizing. Okay. I had a 40+% position in this yesterday. At one point I had like a 60% position in this. Okay. As I sit here, it's still a 45% position right now. So it's bigger today than it was yesterday because the stock went up so much, even after me modestly selling some. It's a big day for me. It's a big risk. It's a big overhang for me being removed. My portfolio is up, I don't know, almost 25% today. It's a good day. I'll take the good days. There's been a lot of bad days. So it's a good win. I still believe that there's more to come here. I mean, you have to understand, this is trading 36 million shares today. We're halfway through the day. It's going to trade its entire market cap today. Now, of course, it's a lot of the same shares being traded over and over again. For some context, last June, when it blew up and the stock went down 60% or 50% or whatever, it traded 8 million shares. In December, when it blew up, it traded, I think it was 5.5 million shares. It's traded 36 million shares today. And it's near the highs of the day right now. So you have to be enthused by what you're seeing. And the kind of black swans you see in biotech, like a safety pop-up or something, is pretty unlikely here. It's already been administered in all the patients. They're doing a final 3rd cohort that's administering now. But the odds of there being a safety problem is extraordinarily low since it's already been administered. But if they come back with the FDA feedback that they have to run a robust phase 3 trial, the stock's going to go down a lot. Make no mistake about it, because they can't run that. And then it remains to be seen whether anybody else would want to run that trial, if they could sell the company or sell the drug or part of the drug. So I don't think a lot has changed here from 6 months ago or 9 months ago when I've been pitching this stock. I mean, I was pitching it in the 6s back then, and I was making it big in the 6s. So if anything, it's better today than it was then, right? It's more data, longer follow-up data, more patients, and it seems to be very clear the drug is active. The only question I would think is how active it is, and we just don't know the answer to that yet. Any QURE questions? I'll move on to other stocks. To say this stock is under-owned and unloved would be the understatement of a lifetime. So it does not take much to change the narrative here and have the stock go way higher. Okay. A buddy of mine today said he doesn't know why the stock's not at $10 yet. And he's a biotech guy. Because remember, $10 is a $100 million enterprise value. And you have a story here now. I mean, it's just so fatigued. This has been going on for years. So it makes it, you can understand why people would be cautious and uninterested in it. The next major catalyst is definitely FDA feedback, and it is a major catalyst. And I do think you'll have it by the end of the year. The other stuff with the other drugs that are launching are much less important. And you're not going to have any data in any of those drugs either. But that works to your advantage too, right? Because you could own this with a negative enterprise value and not be worried about a data update. You just got the data update, and you can just kind of wait to see whether or not the FDA shows you a path. I do believe that the FDA will show a path that's not a phase 3. The question is how strict the FDA is going to be about that path, right? Because think about it. The FDA can say, yeah, sure, if you show us 4 years of follow-up, and that 4 years, has a p-value of 0.0001 versus our natural history match that we come up with, and your NFT data is still, or NFL data is still below baseline, then we were open to accelerated approval or full approval. So they can make it as stringent as they want to be while still allowing a door to be open. I think the odds that they just flat out close the door and say you need to run a 50 or 100 patient phase 3 placebo-controlled trial that will take 5+ years from the day they launch it is low. I don't think that that's what they're going to ask to do. And I think the stock will go a lot higher once you get that feedback. And at that point, what you do with the stock is anybody's guess. The stock should be well above $10. Are you looking for additional exposure in blue sky if they tell us by call spreads, not even lower compensation? I actually already own January 10-15 call spreads and January 26 10-15 call spreads. And I own a pretty fair amount of them. So to me, that's the way I can get paid as I trim the stock as it goes up. I won't be taking those off. And I think I bought those, Paul, around when the stock was in the 5s and 6s. So I don't know how easy it would be to get those off today. But I think I paid like 50 or 60 cents for those for 10-15 call spreads. Because, yeah, it could easily go to $15 on a blue sky FDA feedback. But yeah, this is a good win. This is a good win, And I consider it, a lot of it, luck. I mean, I did believe that the HD drug had a shot, and I thought that the previous data was compelling-ish from an efficacy perspective, but I clearly wasn't banking on this playing out the way it's playing out today. I just thought that we weren't paying anything for it. Of course, I thought we weren't paying anything for it at 6, at 5.50, at 5, at 4.50, at 4. I didn't think it'd even go to $4 on a bad HD outcome. And we were at $3.80 yesterday. So, do we have some news on any of the other 3 drugs for the next FDA meet? They haven't even entered the clinic yet, the other 3 drugs. So they're going to start dosing patients with them this quarter. The only news you get there is that there's a very bad safety signal and they had to halt the dosing. You'll never get good news there. You'd only get bad news there. But again, I don't really think any of it matters because nobody's paying for any of this. If one of those 3 drugs falls out of the clinic, nobody cares, except the epilepsy drug. If the epilepsy drug gets halted for safety, the stock would go down because that's the only other really promising drug they have in their pipeline. You know, what's so hard about investing is that it's easy to anchor on stuff. So like this morning it was trading at 450 and I was like, I told somebody, I was like, it was 450 4 days ago, right? And even right now it's 630, but even not even looking historically what it's traded at, just look at it as if it was a private company and you're going to try to evaluate it. I'm pretty sure if I told you this was a private company and I'm going to let you invest at 630 and it has $8 in cash and these 4 drugs, and one of them has a chance at being a multi-billion-dollar blockbuster and is years and has already been tested for years and is on the cusp of meeting with the FDA after just getting a special designation, you wouldn't believe me that you'd be able to do that, right? It's not hyping it. I'm just saying you would think there's no way I could buy this below the cash. I mean, I'm starting. I mean, seriously, I'm pitching you this. Let's say I'm a private company. I want you to invest in my startup. It's a new startup. I want you in. You could get to put money in below the cash on our balance sheet. You would tell me I'm crazy. Why would I do that? You know, in reality, if this was a private company and they were doing a round or a raise, or they were doing stock options for employees, they would be valuing the company at a positive multi-$100 million enterprise value. Maybe 300, 400, $500 million. And if you have a $300 million enterprise value here, that's $6 of enterprise value and $8 of cash. That's $14 a share today. And that's kind of how you would value it, I think, if you were a private company. But it's not $14 a share, it's $6.30. So anyway, I'd be careful about anchoring on anything. But look, the most important thing in this business is position sizing. It's not even getting the stocks right or wrong. If you have 20 stocks and 19 of them were positioned at 1% positions and they all went to zero, but the 20th one was a 20% position and it tripled, you had a great year. You batted 5%, but your slugging percentage was huge and you made lots of money, you know? And the same thing goes with whether you decide whether to buy or sell things on a daily basis. I have a buddy that I put the stock into the stock, and he asked me if he should sell today. And I said, I have no idea if you should sell. I go, it really depends on how big you are and what your risk tolerance is. I don't know how many shares he owns. I don't know what percentage of his portfolio it is. He's a friend of my brother's, and he likes to mimic some of the stocks I own. And you can't answer that question. You could definitely tell somebody when you sold out of a position, right? That's binary. There's nothing in it. You're out. But anything from 1% position to a 50% position, it all depends on what your personal risk tolerance is and what you should be doing with it. I mean, my risk tolerance, this is not taught and should not be taught in any finance class. I truly don't think anybody should be taking position sizes like I do. I don't think I should be taking position sizes like I do. But, here I am. So it is what it is. Do you think a bio fund might be accumulating today? The volume is staggering, Jason. I mean, it's never traded as much volume in the company's history. Now, to be clear, its dollar volume is lower than when it blew up. When it blew up, it traded 8 million shares at an average of like $12. So Oh, actually, no. The dollar volume is more now. Much more. Yeah. 8 times 12 versus 40 times 6. And we still have 3 hours left today, 3.5 hours. So it's wild, you know. The price action is wild. The volume is wild. I don't even know. I did make that. I think it wasn't LGF. I think it was Alteryx. But I haven't made anything 100%. Alteryx was 100% delta adjusted. I did make EDR 100% delta adjusted. Both those worked. I've actually never had 100% delta adjusted position not work. So, I mean, obviously, if I had one that failed, it would go to 0. To be clear, delta adjusted is not as simple as it sounds. If 100% delta adjusted position is almost all options, and it goes to 0, I don't not lose my whole portfolio. I might lose like 30% of my portfolio, and that's pre-tax and yada yada yada. So it's much more complicated than, you know, QURE is almost all common, you know, 95% common. Today is 3 times the previous high volume day for QURE, and it's only halfway through the day. It's halfway through the day. So yeah, I'm pretty enthused. And yeah, I think it should be in like $8, $9 today. That's what I would think it would be, or will be soon, hopefully. Because if it's $8, $9, you can have a whole different kinds of probabilities of what happens with the FDA, downside to 5, upside to 20, you know, kind of thing. If it gets to 9, I am off. Yeah, I mean, clearly in the 8s, 9s, 10s, I'm a fraction of what I am today, right? There's no question about it. It's a totally different kind of proposition. It isn't why I made it so big. For anybody that's new to watching these videos, this only became this big of a position below 6. It wasn't as big as 657, et cetera. I just started getting huge below 6, and just kept buying. So, and yes, and I saw someone said before, you've owned it for 6 months or something. I'm fatigued after 8 months. Yes, this has not been fun, you know. So I'm happy to be smaller over time and to breathe again a little bit. All right, let's move on. I want to talk about a new idea, Macy's, and I want to talk about RCM, which I talked about very briefly, I think, a few months ago. RCM, I could save you the time and just read Andrew Walker's blog post from yesterday. Yet another value blog, as you all know. It's a fascinating situation. It's less interesting here at 1290 than it was the previous 2 days, but I still think it's interesting. I have not sold any of my RCM. I actually bought more last week when it went down to 11. I'm not going to spend too much time on it because Andrew does a great write-up on it. But basically, you have the weirdest situation there. You have 2 30% holders. So there's 2 major groups that each own 30 to 35% of the company, and they were going to work together to take it out. And instead of working together, they have now announced in the last week that they are going to compete with each other to take it out. So there's a bidding war in a company with 2 35% shareholders. There are all sorts of nuances here and risks involved. The biggest risk, of course, is that one of the 2 bidders wins the auction, but the other bidder says, I'm still not going to vote for it. And then the board does not waive the majority of minority vote, which is not a legal thing. You don't have to do that. You just do it to avoid lawsuits after you close. And if the board does not waive that, then you can't get the vote through because a 30 to 35% holder has a blocking position in a majority of minority. So that is the biggest sole risk with RCM. Andrew does a great job going into very depth about this. So read Andrew's blog. And that one is easily the most interesting majority minority takeout I think I've ever seen, given we now have two different shareholders that both want to own it. Macy's, I don't know why I'm so into department stores these days, because we all know I own Nordstrom. But Macy's is such an interesting situation. You have a activist shareholder who's been trying to buy the company since last year. They first bid 21, they got rejected. Then in March, they raised the bid to 24 and they press released it. And the company did not reject it like they did previously with a $21 bid. They then launched a full-on proxy. I think in February, they launched a full proxy battle before they raised the bid in March for the entire board. Then the first week of April, or the second week of April, the company settled with the activist, put 2 board members on the board, and announced that they are working with the bidders to provide confidential information and due diligence towards their bid. Okay, none of that was enough to get me intrigued at the time, because it's very different than Nordstrom. With Nordstrom, you have a board and a management team that are receptive of going private, and it's a friendly situation. With Macy's, it's all hostile, and the company clearly did not want this approach. What changed for me was last Friday, a very good author at the Wall Street Journal said that they raised their bid from 24 to 24.80. Since then, you've had no press release confirming it and no comment from the company. Okay. So I see good and I see bad with this, them raising it to 24.80. And I think the setup is pretty interesting here as a result. So what's the bad? The bad is that they leaked it for a reason. And it's not because they're within days of signing a deal. Okay. It's definitely possible and even probably likely that the company has told them you need to get your bid up. And maybe 24.80 isn't enough to do that. But conversely, the good news is they've had over 3 months now to do due diligence on the company. And not only are they not lowering the bid, but they're raising the bid. And it also means that the process is not dead. And the company's been negotiating with them for many, many months. Okay. The stock's sitting at $19. And it's a very cheap stock. So while it's very hard to know what the break is here, we know that the upside is 24.80 or higher, depending on what the final buy price is. In fact, it might end up being higher. And this is just a negotiation with the company to get them to the maximum price they could pay for it. So I bought Macy's common and I own some spreads. I own some August 20 calls, some September 2022s, and I own some January 2022s. The reason why I have spreads on is you could win either way there. If they have good earnings in August, then the September spreads might pay off anyway. Same thing as the January spreads. You don't need a deal. I think the August calls are worth, a lotto pick, because I do think this could be done in 6 weeks, given how long they've had to negotiate and given this most recent leak. I think it's very telling that they didn't put out a press release saying, we raised our bid, they're stalling, yada, yada, yada. They did this in the last 2 times, the 21 and 24. I don't know if they've signed any legal documents with the company that told them that they can't anymore agitate now that they've settled with their proxy battle. But I find it very intriguing at $19. It's very different than Nordstrom, okay? My Nordstrom position is mostly these butterflies and 1x2 spreads and all these weird things I have on. But with Nordstrom, I think a deal could be $23 to $26. And it's trading $21.75. So you're not talking about a lot of upside in Nordstrom anymore by owning the common. And I wouldn't buy the common today if I didn't have this complex position with 1x2 call spreads and all these other butterflies and all these crazy calls I have on. But with Macy's at $19, you don't really have to get that cute, right? You can have a common position on. 19 to 25 is a huge freaking move. On the downside, does it go to 17 on a break? You know, it's a very cheap stock. So they put up decent numbers last quarter. So maybe you have 10% down and 25% up. And I'm just hard pressed to see how the company gets away with not doing a deal. I think the financing's all there. If you read the $24 press release, they highlight all their financial partners. I don't think the financing is an issue. I think that people just don't believe, all these departments. There's Kohl's burned people terribly. Nordstrom tried to go private, in 2017, didn't work. So I think that's the opportunity with Nordstrom and with Macy's. But again, the difference with Macy's is you get to own it, you get on common, and you have a lot of upside there. Obviously, I'm waiting on TH. TH is my biggest position. I'm on pins and needles there. What happens? The thing I keep coming back to with Target Hospitality is that they did not have to put a paragraph in that press release giving you an update on the bid from TDR. That press release was for updated guidance. And if that bid was dead or on life support, they would not have put that they are in the process of reviewing and evaluating the bid. It does not help TDR and does not help Target to string along shareholders for a dead bid. TDR is not marking this on a weekly or monthly basis, and it doesn't do anything for them. So I do believe that they are actively negotiating a price. It'll be easier to get a price across the finish line now as a result of what happened with Dilly. I also believe that they will use the assets at Dilly for the third government bid with the ICF. And they could bid competitively because they already have the assets. They don't have to put any CapEx into it. So I think it's likely they will win that bid. And that bid could be worth $50 to $100 million in EBITDA. And now would be the time for them to wrap this up, given that information. So I'm very nervous with Target. It's a very big position. And I'm less nervous now because QURE worked. But I couldn't handle QURE blowing up again and Target blowing up again, because I made Target so much bigger again after it blew up. I mean, that's like a 60% delta adjusted position, Target, with 2/3 of that options, 1/3 common. I set that one up to where a lot of the options are Jan 26 call spreads, 750 at the bottom, 1250 at the top. So that if it does fail, I have multiple ways to win between now and Jan 26 with new contracts. I'm obviously still huge in BridgeBio. Nothing's changed there. Those are my three biggest positions: Target, BridgeBio, and QURE. We'll see what happens when the full data gets released at the end of August with BridgeBio. I also have meaningfully sized up AQN. Again, they are going to announce any day now the sale of their renewables. I believe that when that happens, plus that deal closes and the AY transaction closes, you have a pretty straightforward path to that re-rating up 40 to 50% from where it's trading today as a regulated utility, a pure play regulated utility. And I like it because it's so different than everything else that I own. It's obviously rate sensitive, but I don't have too many rate sensitive stocks. So biotech is, of course. So I made that bigger. That's like an 18% position now, or 17% position. I think that's pretty much everything. Yeah. Any other questions? MX, I still have the whole position. That's like a 13% position. My least enthused stock I own is MX. The way I look at Magnachip is that it's kind of like it's not a no-cost call option because they're burning cash now. So if they never get business again, it's going to kind of decline annually, 50 cents to $1. But that said, you need very little to go right with magnet chip for it to double. And I'm willing to wait around to see if that happens. A double is really not a demanding valuation for it if the very little goes right there. So, but man, that's my biggest loser of my life, dollar-wise and percentage-wise. So if I can go back in time and never be involved with a Korean semiconductor, I would go back in time and never be involved with a Korean semiconductor. That's basically all my positions. I still own Roivant. I still own, I have a position in Immunovent too. I still own a small position in CYTK I bought, and a call spread there. I have a pretty big position in AMPY now. That's one of my top 7 positions. A lot's happening with AMPY in the next 6 months. They're going to announce an asset sale, and they're going to announce their beta drilling. If both of those things go well, it's easily an $8, $9, $10 stock, I think, with very little downside. So I just have something just went crazy with QURE. Jesus Christ. Go, baby, go. Was it on CNBC or something? Just moved hard. I think today is going to be a good Scotch day. We needed this one, team. We definitely needed this one. Wowza. All right. I'm happy to be on your positive. No Vegas, please. I'll tell you what, if TH gets sold for 1080 or more and Bridge Bio goes back into the 30s, there is definitely a Vegas trip planned for this fall. It never works, but I want TH sold for 1080 or more. I want Bridge Bio back in the 30s. I like Nordstrom sold too. Maybe some combination of all those things. And we'll finally get our Vegas trip. What do you guys think, huh? Anyway, all right. I'm happy. This is a good day. Peace. Take care, guys.